U.S. stocks likely to open higher. We kind of discussed that they've pulled back a little bit off their pre-market highs, but still hanging out around unchanged here. After the NASDAQ and S&P 500 scaled new highs for 2 days, the indices slipped on Tuesday as President Trump's massive tax and spending One Big Beautiful Bill Act passed narrowly in the Senate. The legislation is now set to move to the House, and from what I understand, the Senate has gone home for the holiday. So if the House can't pass this, that's it until after the holiday. I know there was a lot of talk about this being done by July 4th. The House is going to have to pass that for that to be the case because, again, I saw a report this morning, the Senate has gone home. The Senate passed the measure with 50 to 51, with Vance breaking the tie. The 10-year Treasury bond yielded 4.28. The 2-year bond was 3.79. So, again, nothing terribly concerning there, although we want to see those continue to come in a little bit. Some insights from analysts here. Following a volatile first half, the S&P 500 appears poised for continued momentum, according to analysts from Adam Turnquist, the chief technical strategist for LPL Financial. Now, I want to stop right there because we've been asking pretty much any guest that has a long-term view and a short-term view what that actually is. And in the webinar that Yassine was referencing last night, we had Tim and Anne-Marie both talk about that. And it was notable that they both kind of think that the second half of this year likely to have some upside potential there. I know Tim has recently been talking about a potential lost decade stagflation scenario. Even he, and we can ask him about that again this morning if you want, but even he is saying, yeah, that might start in 2026, but it sure looks like the back half of 2025 is going to have some potential upside. Other analysts are saying the same thing. We have seasonality stats that are telling us the same thing, both for the time of the year as well as within a new presidential election cycle. So there's a lot of data telling us that the back half of 2025 is actually going to be pretty good. I suspect this to be the case because all of this tariff stuff that really knocked the market down 20% in the first half of the year, that's the bitter. And now the sweet part of all that is going to happen in the back half of the year here, starting with tax reform and all of that. So I totally agree with this sentiment here. I am going to remain nimble, but primarily for swings, I'm going to be looking for upside swings into the back half of the year. Remember, we also talked about July being the second best month. Well, the first best month is November. And so that's coming up here. Also really good because that's got NFL football in it, but I digress. Historical data spanning back to 1950 suggests a strong bullish precedent for the second half of the year, particularly when the first 6 months delivered solid gains by the end. The S&P 500 is wrapped up in the first half of 2025 with a commendable 5.5% gain, shaking off a deep correction experienced in April. This performance sets the stage for what history indicates could be another period of positive returns. Quote, since 1950, the S&P 500 has followed up a positive first half return with an average second half gain of 6.1%. We tack 6.1% on top of the 5.5% that we've had in the first half of the year. Giddy up. We're all going to be happy come the holiday season. Delving deeper into scenarios akin to the current market environment, Turnquist highlights a particularly encouraging trend. Quote, furthermore, when first half gains were within the range of 5 to 10%, the index also posted an average gain of 6.1% in the second half, with an 86% of occurrences producing positive results. So this is another thing that we've been talking about here with seasonality, and we'll continue to focus on this as we expand that as a data point. It's not just do you win or lose? It's how much do you win or lose, and how often do you win or lose? These stats setting up pretty good for the back half of the year here. This statistical backing provides a compelling case for optimism heading into the latter half of the year. While the historical data points while the historical data points to a generally positive outlook, Turnquist also tempers expectations with a pragmatic reminder. Despite the bullish precedent from a positive first half, bull markets are not linear, and pullback should be expected in the second half. This is something that you just really can't lose sight of. I'm definitely someone that is long side biased. I'm definitely glass half full, bullish, whatever you want to categorize me as. But Nothing is linear. There's always going to be ups and downs. And in fact, what's really going to make this better for us is how we use some of those down periods to capitalize more on the rips higher. This group has done an excellent job of doing this recently. Despite you folks that have been bearish, you've been buying on dips and then selling into rips. And that's exactly what you're supposed to do, frankly. Goes on to say, he points out that the average maximum drawdown for the S&P 500 during the second half has been minus 10.3% since 1950. However, even these potential dips tend to be shallower in scenarios like the present. Quote, second half drawdowns following a first half 5 to 10% or higher average only 8.4%. He concludes, suggesting that while volatility is a possibility, significant downturns may be less likely. So even if this doesn't work out, when we see some downward move, it probably is going to be a little bit muted. That will actually set up an interesting 2026, but we'll address that as that comes. Meanwhile, Ryan Dietrich from Carson Research highlighted a historical pattern where the S&P 500, after a negative first quarter and a subsequent 10% gain in the second quarter, has shown an average third quarter return of 10.7 and 19% gain for the rest of the year. Those are some pretty good numbers for a single quarter. The data from 1990, 2009, and 2025 suggest a potential bullish trend for the second half of 2025, supported by the analysis. Here's the actual tweet for that. So you let me know if you folks think that we're going to have a nice, let's just be general about it, a nice second half here. Let me know. Let me know what you think about that.